Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Short Cycle RSI Reversion. This is a trend-aligned, mean reversion approach. It combines a long exponential moving average that defines the dominant trend with a very short, fast-reacting relative strength index that times the entry. Over the next few minutes, we'll unpack how the strategy reads the market, how it decides when to enter and when to exit, and we'll walk through both the code and a candle-by-candle chart. Remember, everything here is for educational purposes only. So what exactly does this expert advisor do? At its heart, Short Cycle RSI Reversion is built on a simple observation about how trends actually move. A healthy trend rarely travels in a straight line. Instead, it advances in bursts and then pauses to catch its breath. Those pauses show up as shallow pullbacks against the trend, and the idea here is that they can offer lower risk spots to join a move that is already underway. Rather than betting against strength, this strategy only looks to buy dips inside an established uptrend and only looks to sell rallies inside an established downtrend. The dominant trend is treated as the edge, and the short cycle oscillator simply times the entry. The approach is designed for liquid, trending instruments. Think of major currency pairs such as EURist or PUST, or a widely traded market like gold, on time frames from the 15-minute up to the 1-hour chart. 3 ingredients do the work. First, a trend filter, built from a long 200-period exponential moving average, and, importantly, its slope. Price above a rising average points to an uptrend. Price below a falling average points to a downtrend. Second, a pullback timer, which is a deliberately short, 3-period relative strength index. Because it is so fast, it snaps to an extreme reading on even the smallest dip or pop, marking the likely exhaustion of the countermove. Third, risk and exit control based on the average true range, so stops and targets scale to each symbol and time frame automatically. This kind of approach may appeal to traders who like trend-following logic but prefer to enter on a pullback rather than chasing price. It holds only one position at a time, and it steps aside when the spread is unusually wide. As always, this is educational information, not financial advice, and trading always carries the risk of loss. Let's break down the mechanics step by step. The expert advisor works on closed bars, meaning it makes its decisions once each new bar has completed, rather than reacting to every flicker of price. On each completed bar, it calculates 3 things: the long exponential moving average, and where it sits compared to several bars ago, the short relative strength index, and the current average true range. For a long entry, 3 conditions must all line up. First, the most recent close must be above the exponential moving average. Second, that average must be rising. The strategy compares it to its value a set number of bars earlier, 5 by default, to confirm the slope is genuinely upward. Third, the short relative strength index must have dropped to or below the oversold level, which defaults to 15. When price is riding above a rising average, but the fast oscillator has dipped into oversold territory, the strategy reads that as a shallow pullback nearing exhaustion, and it signals a buy. The short entry is the mirror image. The close must be below the exponential moving average. The average must be falling, and the short relative strength index must have climbed to or above the overbought level, which is 100 minus the oversold setting, so 85 by default. That combination describes a brief rally inside a downtrend, and the strategy signals a sell. Now for the exits. The primary profit taker is the oscillator itself. Once a long position is open, the strategy watches for the relative strength index to recover back up to or above the exit level, which defaults to 55. When it does, the snapback the strategy was aiming for has largely played out, so it banks the position and steps aside. For a short, it waits for the oscillator to fall back to or below 45. Backing all of this up is the average true range. The stop loss is placed a volatility-scaled distance from entry, 2.5 times the average true range by default, while a more generous target, 4 times the average true range, acts as a safety cap. Only one position is held at a time, so entries never stack while a snapback is still resolving, and a spread filter blocks entries when execution costs are unusually high. Let's look at the actual MetaTrader 5 code on screen, just as it appears in MetaEditor. At the top, we have the input parameters, the settings you can adjust before running the expert advisor. Trend period is the length of the long exponential moving average, set to 200. Slope loop back, 5, is how many bars back the average is compared against to judge its slope. RSI period is a fast 3, oversold level is 15, and exit level is 55. Then come the average true range settings and the risk multipliers, a stop distance of 2.5 and a target distance of 4, along with the maximum spread, the lot size, and the magic number that tags the trades. Below the inputs are the two signal blocks. The first checks the long side. If uptrend is true, that is, the close is above a rising average, and the oscillator reading is at or below the oversold level, the code fetches the ask price, sets the stop loss a set number of average true range units below entry, sets the take profit above it, and calls trade.buy. The second block is the short side. If downtrend is true and the oscillator is at or above the overbought level, it fetches the bid, places the stop above entry, the target below, and calls trade.sell. Notice how both sides are perfectly symmetrical, and how the stop and target are always derived from volatility rather than fixed distances. That's the whole engine, in just a couple of tidy conditions. Now let's bring it all together on a chart, and walk through both a long and a short trade from start to finish. Along the bottom you can see the short, 3-period relative strength index, with the oversold band down near 15 and the overbought band up near 85. Drawn across the candles is the blue exponential moving average, our trend filter. Look at the opening candles on the left. Price is climbing steadily and sitting comfortably above the blue average, and that average is sloping upward. This is exactly the environment the strategy wants for a long, an established, rising trend. Then, on the third candle, price pulls back. A small bar dips lower. Notice what the oscillator does underneath. Because it is so fast, it plunges straight down into the oversold band, at or below 15. Now all three long conditions are satisfied at once. Price is still above the rising average, the trend is intact, and the pullback has pushed the oscillator to an extreme. The strategy signals a buy, and you can see the buy entry marker appear right at that dip. From there, watch price snap back in the direction of the trend. The next candles rebuild higher, and the oscillator lifts off its lows and begins climbing back toward the middle. The strategy is not waiting for a giant move. Its primary exit is the oscillator reverting. As the relative strength index recovers up through the exit level of 55, around the sixth candle, the snapback has played out. The position is banked at the exit marker, capturing the thrust out of the pullback. In the background, the stop sat a couple of average true range units below the entry, and the safety target sat further above, but here the oscillator exit did the work first. Now the character of the market changes. A few candles later, price stalls, rolls over, and pushes down through the blue average. The average itself flattens and begins to slope downward. We have flipped into a confirmed downtrend, price below a falling average. Watch carefully around the 10th candle. The oscillator is now deeply oversold. But notice the strategy does nothing. This is a crucial teaching point. An oversold reading inside a downtrend is not a buy signal here, because the trend filter forbids it. The strategy simply stands aside, which is exactly how it avoids catching a falling market. Then comes the setup it is waiting for. Price bounces in a brief countertrend rally, a candle pushing back up toward the falling average. That quick pop launches the fast oscillator up into the overbought band, at or above 85. Now the short conditions align. Price is below a falling average, and the oscillator has reached an upward extreme, marking the rally as likely exhausted. The strategy signals a sell, and the sell entry marker appears at that bounce. From there, price resumes its decline, falling with the dominant trend. The oscillator rolls back down, and as it drops through the short exit level of 45, the snapback is complete and the position is banked at the exit marker near a fresh low. Once again, the volatility-based stop and target framed the risk in the background, while the oscillator reversion timed the exit. Step back and you can see the rhythm. In both trades, the trend filter decided the direction. The short oscillator timed the entry on a pullback, and the reversion of that same oscillator timed the exit, with the average true range quietly defining risk the whole way through. The reward to risk framing comes from the 4-to-1 target against the 2.5 stop, though in practice the oscillator exit often closes the trade before either level is reached. That brings us to the end of our walkthrough of short cycle RSI reversion. We've covered how it combines a 200-period trend filter with a fast, 3-period oscillator to buy shallow dips in uptrends and sell shallow rallies in downtrends, how the average true range frames its risk, and how the oscillator's reversion times the exit. Remember, everything in this video is for educational purposes only and is not financial advice, a recommendation, or a solicitation to trade. Every strategy carries the risk of loss, and no approach performs well in all conditions. If you found this breakdown helpful, please like the video, leave a comment with the strategy you'd like us to analyze next, and subscribe so you don't miss what's coming. You can find more educational content over at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.